Today's lesson is about the concept of return on investment. Now, an investment is anything you spend money on that you will use to make money or extract some kind of value. In economics, it's often called capital. It's kind of like anything you have to pay for in order to make money. So today we're going to talk about the returns on our investments for 3 different concerts. Back when we were just learning this game, we bought tickets for Nas and Lauryn Hill playing at the Fox Theater in Oakland. I went to the concert and Nas was awesome. Someday I want to grow up to be just like him. So I bought floor tickets and the subtotal cost of the tickets was $283.30. But Ticketmaster charged me $4.45 for processing the order and then conveniently allowed me to print them on my own printer for another $2.50. Thus, the total cost of the tickets came out to be $290.75. The total cost of the 8 tickets for Mike Tyson's Undisputable Truth came out to be $645. The way that breaks down is 4 lodge seats at $95 a piece and 4 balcony seats at $65 a piece. That's a total of $645. Now, they were purchased straight through San Francisco's Broadway box office, delivered electronically, and they were nice enough to do that service for free. Swedish House Mafia played 5 straight nights in San Francisco back in February. Apparently it's their final tour, but you know how that goes. Once they run out of fortune and fame, they'll probably do a reunion one. I didn't know who they were, but since the first 4 nights sold out so quickly, I decided to buy the tickets for Sunday night. They were a hot ticket as it turned out, and the $158.65 I spent turned out to be well worth it. In economics, these are called costs. Costs is what you spend, and revenues are what you receive. Don't get revenue confused with profit. They mean different things, and you have to keep that in mind. If you work at a cash register, the money at the register in the end of the day is your revenue. But to find out profit, you have to remember what you paid for all those goods you sold. In our case, revenues is the money we received for the tickets. Now, we took a net loss on the Nas tickets when we sold them on StubHub for $272. We sold them at $80 a pop for a total of $320, but StubHub extracted their fees for the service they offer, connecting buyers and sellers, the stock exchange of concert and event tickets, and that was $48. So that means the total revenue for that one concert is $272. We sold the Tyson tickets for a total of $790.50 after the fees. We actually went to the show on Thursday night, which was opening night, and then sold the tickets for the Friday night show. Since we bought the tickets right when they went on sale, we got the best seats in the house at the price offered. So by Friday night, after Iron Mike had already created a buzz in town from his Thursday night performance, we got paid pretty okay. We sold the Swedish House Mafia tickets through Craigslist for $200. We could have sold them for more, but we met some true fans, deserving souls, and we asked them to do a commercial for our organization in exchange for our generosity, once we get the resources. So, those figures, the amounts we sold them for, are called our revenues. To calculate net profits, we need to take what we received and subtract what we paid. For Nas, this was $272 minus $290.75, or a net loss of $18.75. For Iron Mike, our net profit was $790.50, subtract $645, or a total of $145.50. The Swedish House Mafia tickets netted us $41.35. These figures are called net because they are the differences of revenues minus cost. We use the symbol pi to measure profits because no matter how you slice it, it's always sweet. And just like the irrational number pi, these things never stop. They just keep going and going and going. Now, net profits are good, but things should be measured in percentages. If I paid $1 million for Mike Tyson tickets and made $20 on it, that wouldn't really be worth my time. Percentages help us put things in context. They give us the ability to reason proportionally and figure out how really good or how really bad a decision each purchase was compared to the others. So to get our ROI, our return on investment, we are going to use the basic percentage formula. Revenues minus cost divided by cost. Let's get a quick pulse check. Are you still listening? Who would win in a fight between Now's and Iron Mike? Exactly. They'd both agree that fighting's for chumps. Which of the three purchases netted us a negative profit? If you said the Now's show, that's correct. So, our calculation for Now's is 272 minus 290.75, which gives us a net loss of $18.75. When you divide that number, 18.75, by 290.75, you get a number of 0.064. Move the decimal place 2 to the right and you get 6.4%. And since we lost money, we would say that our return on investment is negative 6.4%. Now, as we go, we start moving quicker, and you got to keep up, or hit the pause button and do the math yourself. Iron Mike's tickets netted us $145.50 out of a total $645 spent, or as a percentage, that number comes out to be 22%. Now, that's a pretty good return on an investment, if it returns that in a year, but it's even sweeter if it does that in a few months. Let's talk about time later. Can you calculate the percentage of our ROI on the SHM? That stands for Return on Investment for Swedish House Mafia. IDK, but 42 divided by 158 turns out to be 26% return on investment. Is that what you got? Cool. Now, a portfolio is kind of like a fruit basket filled with investments. Do you think you can calculate the ROI of our total portfolio of all three purchases? Would you just add up the three percentages? 26 plus 22 minus 6.4 equals 41.6. Divided by 3 is 13.8, right? Well, that's wrong because it isn't actually weighted correctly. To get the return on our total portfolio, let's add up all our costs. Go ahead, do it yourself. And you should get about $1,093. To make things easy, let's use $1,100 as an estimate of our total costs across our whole portfolio. Now, let's calculate our total revenues for our whole portfolio. If you do that and you do it correctly, you should get $1,262. That gives us a total profit of $162 on our upfront investment of $1,100, or a total return of about 14.7% on our portfolio. The next thing to learn is how to incorporate the concept of time. When portfolio managers pitch to investors, they give them return on investment figures calculated on an annualized basis. Brought to you by Togha, Togha, Togha.